With God's name, the merciful benefactor, the merciful redeemer. Assalamu alaikum, greetings of peace and welcome to everyone who took time to join us today. My name is Fitrah Muhammad, moderator for this three-part series on creating community wealth through land development and operating nonprofit organizations. These series have been planned for you by Study al-Islam and Masjid Muhammad, the nation's mosque. Many of our financial woes are a result of not having information, resources, or personal relationships with professionals or friends that can help us properly manage our money, prepare, and stick to a budget. The focus of this first program is the importance of keeping good financial records in our business and our masjids. So let's welcome our panelists. Our first panelist, most of us know, is Khafi Knox-McDowell. Khafi is a native of Philadelphia, Pennsylvania. She has her BS in accounting and business management and a master's in accounting and information technology. As CFO, Chief Financial Officer at Masjid Muhammad, the nation's mosque, she used her 20 plus years of experience in accounting, grant management, government compliance, nonprofit, and community program planning to protect and represent the financial interests of Masjid Muhammad on the historic Clara project, a major land development, mixed housing, and commercial property that recently broke ground in DC. Alhamdulillah Rabbil Alameen. She serves as one of the national next generation leaders within the Muslim community under the leadership of Imam Warithuddin Muhammad. May he be in the highest place in paradise. Khafi is engaged in national and international inter and intra-faith exchanges. Welcome, Khafi.
Thank you.
Next, we have Dr. Daniel Selby. He is a licensed certified public accountant in Virginia, California, and Florida. And he is also a certified information systems auditor. He earned his doctorate of accounting and his master's in accounting information systems from Florida State University, MBE certification from Dartmouth. Daniel has over 20 years of experience in audit, IT automated controls, internal controls, risk management, specialized agreed upon procedures, and payroll and financial reporting, governance, manual business processes, compliance, and financial reporting. Daniel has also taught undergraduate and graduate auditing, advanced auditing, IT auditing, accounting information systems, intermediate accounting, financial accounting, and managerial accounting at Florida State University, Florida A&M University, and the University of Richmond. And so, Dr. Daniel, welcome.
Assalamu alaikum, sister.
Wa alaikum salam. Both are so highly educated and experienced, so that you, the listening audience, can walk away with useful information. Khafi will focus her comments on best practices in the masjid, accounting practices in the masjid, and Dr. Daniel will focus his comments on nonprofit businesses. You can ask any questions of either panelist by placing them in the Q&A box. So let's get started. Our opening question is to Dr. Daniel first. Dr. Daniel, why is it imperative that businesses maintain accurate financial records?
Assalamu alaikum wa rahmatullahi wa barakatuh. I'm grateful to be here with you today and to be a benefit to others. With the knowledge that I have, I can give the audience 4 good reasons why it's imperative for businesses and massages to maintain accurate financial records. The 4 reasons are religious, legal, practical, and for your peace of mind. So first, let's start with the religious. There's a surah and a hadith to support this objective. Surah 83, verses 1 through 3. Woe to those who deal in fraud, who demand full measure from men, but who also give less than due. And from the hadith perspective, trust in Allah, but tie your camel. So I personally take all this to mean that your financial records are your way of knowing what full measure is and not leaving it up to doubt. And this is the tie your camel part. Now, second, let's talk about the legal response to this. Internal Revenue Code topic 305. You must keep records such as receipts, canceled checks, and other documents that support an item of income, a deduction, or a credit appearing on your tax return. You must maintain your records, to otherwise the IRS can deny items on your tax return. They can make up numbers, and I've seen that happen, and they can hold tax filers accountable for the numbers that they make up. And believe me, it does happen, and they will exaggerate numbers that will not be in your favor. So as far as retaining those records, for up to 3 years from the date of return filing, or whichever happens first, and if there is unreported income by more of 25%, then you have to maintain those records for up to 6 years. And keep in mind that there is no statute of limitations if there is fraud in those tax returns. So you have to keep those records indefinitely. Okay, so keep that in mind. And then let's talk about the third reason, the practical. Good financial records mean lower cost to you when you hire professionals like me because you pay for my time. The more organized your financial records mean less time to audit, review, and compile your financial reports. So I'm not saying that I won't work for you if your financial records are not organized. However, it will save you money. And now let's talk about the last response to this question, the peace of mind part. Keeping accurate financial records for legal and practical reasons is just a baseline. What you really need to do is elevate your business with accurate financial records that enable you to predict future events as they pertain to your business. This is where there's real benefits for you, and they can be found in keeping accurate financial records. You'll have a better handle on your business direction. It will help you identify wasteful spending and locate areas where you can enhance your profits.
Excellent, excellent. Khafi, the same question to you as it regards the masjids. Why is it imperative that the masjids maintain accurate financial records?
Bismillah ar-Rahman ar-Rahim. Thank you for having me. Okay, I concur with Brother Daniel's assessment of this particular question, but I would like to add a few other notes. When dealing with masjids, one of the key things is trust and integrity. We have had challenges in the past in a lot of our masajids in dealing with that. And if you are able to keep proper records, it can sidebar that. It'll put more trust inside of the community, and then people will want to give. Masjids are mostly ran by donations. So that's the biggest pot of funding that you receive when you're running a masjid. So it's very, very important to keep that trust factor in that transparency with the community in order to make sure that they're comfortable with the funds that they're giving to you, in addition to that you're spending it in the best way. They need to be accurate. You need to make sure that you are able to actually do that for your other stakeholders, like your grantors, the federal government. So you have other stakeholders that are interested in making sure that you have proper records. Banks, when you try to grow the business of the masjid, you need to have that integrity piece in place so that you could be able to qualify for those things. So those are the main reasons why.
Let me ask you a question about transparency, because that's really important. When people give their money, transparency is important. What are the ways that the masjid, I know you work at Masjid Muhammad, the nation's mosque, because I work there with you, but tell us, share with the audience, what are the ways, the methods that is used to keep the community aware and keep transparency practice transparency. What are some of those methods that are used to do that, to achieve that?
Yes. During our community meetings, we always disclose that information, our financials to the community. I just to be transparent, there are some other, we need to strengthen some things. So as you move and you try to grow the financial part of the Masjid, you find ways to strengthen your communication with the community, because that's really the key, that the people know what's going on, that the people know where the money is going. We have quarterly, sometimes more than quarterly, especially during COVID, community meetings or community check-ins. We also have a retreat that we bring in our leaders, and we have conversation. If anybody have any questions, of course, I'm available for any questions or concerns that individuals might have about the finances of the Masjid. So I think that the key is to be able to just keep that communication line open, and also put out information so that people can feel comfortable about where their funding is going. And I've seen some seniors just really give out of their pockets, and we're obligated to make sure that they're comfortable that those sacrifices that they're making, that those funds are going to the proper places and a benefit to the community.
And I could add to that also.
Please.
If you receive, at least in the state of Virginia, if you receive more than $750,000 in donations and grants, you have to get an annual audit. So there's a thing referred to as the single audit, where you could have each grant fund audited, and that the auditor's report could be public information. And that's a great way to demonstrate transparency to the members of the community.
Excellent. So Dr. Daniel, what are the tax advantages, if any, in structuring a business? Now, a lot of people that I talk to, they ask themselves, is it better to be a limited liability company? Is it better to go into partnership? Is it better to go and, so I'm not asking you from a legal perspective, but I'm asking you from a tax perspective. I know they go hand in hand, but try to speak to the tax perspective. What is the easiest and most transparent way to manage your business?
My sister, if I had $1 for every time I've been asked that question, I'd be rich. I'd be taking this call from my yacht. But let me be honest with you. Let me apologize in advance. The answer to this question is a very long one. So bear with me as I give my response and answer the question as thoroughly as I can without going into too much detail. So first of all, we have the sole proprietorships. So a sole proprietorship in its infancy stages are great for those who also have jobs and other means of profitable income sources. The logic here is that most businesses in their infant stages lose money. Those losses pass through to your personal tax return to reduce your personal taxable income. But we can tie this argument back to what we've already discussed about accurate financial records. Many filers in their infancy stages don't keep accurate financial records. So during the course of the year, they don't know if they've lost money or made money. But lo and behold, when it's time to file those tax returns, it's already after December 31st. So now you're looking at a profit. And then in addition to those profits, if you're profitable, you have a thing called a self-employment tax, which is a mandatory 15.3% tax. So that is the profits from the business where you pay the 15.3% tax if you make more than $600. That's also taken into account with your adjusted gross income. So as you can see, there's a myriad of problems that can come from not keeping accurate financial records if you're a sole proprietorship. And that is a commonly used form of business. If your business is attaching a Schedule C 1040 to your personal tax return, then you're a sole proprietorship. So next we have partnerships and S corporations. They also offer an opportunity to pass losses through to your personal tax return that reduce your taxable income, but also have earlier filing deadlines than other business entity structure types. But the good news for those profitable partnerships is that there is no self-employment tax for those partnerships. The bad news is that the partnership has the highest failure rate of all business entity structures. So now let's talk about the S Corp. We have already mentioned that S Corps allow you to pass losses through to your personal tax returns. S Corps also offer some degree of limited liability protection, but the knock on S Corps is that the IRS goes really hard on them because of the following. Profitable income from S corporations can pass through to your personal tax returns without self-employment taxes. But in order to make this work, the owners need to make reasonable income during the year as W-2 income, as many fail to do. So I'm not trying to scare you away from forming your business as an S Corp, but your odds of being audited are highest because of everything I just told you. So here's where income amounts will be made up for you by taxing authorities so that they can levy payroll taxes and late filing fines for 941s, W-2s, and 1099s. And the 1099s come into play if you're going to try to claim some of that income as dividend income. So if you're wondering why so many tax attorneys and CPAs encourage their clients to go as S corporations, my theory is really simple. The setup for S corporations is easy, and the actual tax returns for S corporations are really easy. They're the easiest returns to prepare. But this does not mean that you will not pay less for the tax returns, because once you declare yourself as a corporation, you're a corporation. So of course, the tax filer is going to charge you a premium on being a corporation. So I've shared all of this with business owners in the past, and most business owners do not listen. And then they find themselves stuck for 60 months because once you make that S corporation declaration, you're stuck. But take a wild guess what happens down the road. They call me after the fact to get out of the S corporation structure because they get an audit notice, or they have to show their personal information every time they apply for business credit. But unfortunately, you're just stuck for 5 years. So now let's move on and talk about the entity structure that has the most power, which is the C corporation. The ultimate tax advantage of C corporations is that you have the lowest rate of being audited when your return is prepared and signed by a licensed certified public accountant. So that's a tax advantage. Another tax advantage with C corporations is the filing deadline is later than partnerships and S corporations. You have the same filing deadline as your personal tax return. And also please know that the biggest benefit of going as a C Corp is that the entire Internal Revenue tax code structure is written to be a benefit to C corporations. So every deduction that's on the books, that's on the table, C corporations are amenable to that, whereas other business structure entity types may not be. So I recommend that if you are going to go as a C Corp, you be aware of the caveats. You got to take a W-2 salary for all the money that you need for your personal expenses, and this will generate payroll tax filings. So there will be additional tax filings and record keeping that you need to be on top of if you go as a C corporation. And then last but not least, we have the LLC, which stands for the Limited Liability Company or Limited Liability Corporation, depending on the state that you reside in. So to make a long story short, you can set up your entity or structured as an LLC and then make a declaration later to choose any of the other business types. But if you start off as an LLC, you're going to be an LLC sole proprietorship or an LLC partnership. So again, apologize for the long answer, but that was the answer to the question.
No, it was very necessary because those who are on the line who are starting their businesses or are ending businesses and starting new businesses because of maybe something they didn't know when they first started their first business. It's important to hear these things and to be able to know that we have people in our community that we have access to that have this kind of information. Khafi, let me ask you this question. Please.
Sister Fitrah, before you ask me that question, I just want to jump in there. Dr. Selby talked about profitability and being able to have a loss or a gain on income. Nonprofits, you can gain income on nonprofits, but it's not income. It's not to you as an individual, it's to the institution to be able to continue to do their work. Some people have the idea that nonprofits can't make money. Nonprofits can make money. You can be profitable as a nonprofit. Yeah. So
that's an excellent point. Mm-hmm. Yeah, you can have a gain. It's just not going to be taxable as a gain, but you need that money to roll over into the next year, the subsequent year. so that you could extend, like say for instance, if you end your year on December 31st and your donations tend to be a little down in January and February, that money that you ended, the extra money that you ended December 31st with rolls over into the subsequent months. And that's how you keep your operations, you keep the lights on and the water flowing into the Masjid so everybody can make their wudu, right? And they're not making their wudu in the dark, right?
That's right.
So that brings me to my next question to you, Khafi. Does being a nonprofit make you tax exempt? And are all businesses connected to masjids? Should they be, or are they nonprofit?
Okay, I'm going to say yes and no.
Okay.
If it's for the tax exempt purpose, so if it's in the work of the masjid, so all of the activities, the religious activities, the community-based activities that have to do with the masjid, if the revenue is going to that, yes. But if you have something like a business that's attached to the masjid, you do have to pay taxes on that revenue. So that's the yes and no. And a nonprofit can own a for-profit. Actually, we learned that in the when we were doing a development project, that it is okay for a nonprofit to own a for-profit, but it's not okay for a for-profit to own a nonprofit. So I just wanted to share.
Absolutely. Absolutely. And the one thing to also think of too, like churches and places of faith don't have to register as 501c3s, but it's advisable because just as an internal control perspective, you register as a 501c3 and everything's above board. There's transparency there and you file your annual reports. And especially if you're seeking donations, that's the way to go. But you'll find that there are some places of faith that don't register as 501cs, but they still can accept donations. And like their pastors and preachers are exempt under certain rules that are given to them as advantages of men of faith.
Khafi, I want you to repeat that one more time about a nonprofit owning or not owning a profit. Repeat that one more time.
Yes, a nonprofit organization can own a for-profit organization.
Okay.
But a for-profit organization cannot own a nonprofit organization.
So a faith-based, the Masjid being a faith-based organization, it is a nonprofit organization. It can own a for-profit organization.
Yeah, actually, and as an example, we actually did our transaction for the development through our CDC, which is a nonprofit organization. Yeah. And in order to receive a tax exempt status, I don't want to get too detailed, a tax exempt status for our developers to be able to make the property that we have tax exempt for them, we had to create a for-profit. There's a special election that you have to go through. Whereas we have a for-profit organization that our CDC owns, but it is a for-profit. It's a for-profit organization, but it's not going to be taxable because it's a special kind of organization.
Got it. Let's move on to our next question.
Can I say something before we move on?
Of course.
So the tax return for the not-for-profit would be a 990, but then for the profitable activity, there's a schedule that's attached to the tax return referred to as a 990T, and that's where you capture the profitable activity. And if you're selling actual tangible goods, keep in mind that you would also have to collect the sales tax.
I want to ask a question.
Instances where you'd have to have sales tax collected too. Sorry for that. Go ahead.
No, but please, your comments are very important to us. I want to ask a question from the audience so that I don't overlook their questions. So the first question is, and Khafi, if you could answer this from for the Masjid, and Dr. Daniels for profit, nonprofit. How important was it, or was it during COVID to keep good records?
Well, it's always important to keep good records. COVID, not COVID, that is just so important. And I think that us as people who are just getting to a space where we are acquiring financial wealth and assets, we have to get into the mindset to know that it's important, even us as individuals, it's important for us to be able to have our financial records in order. It's very important. It does not deviate because of the circumstance. That is something that should be consistent in every situation when you're dealing with finances.
I think she's answered it, Dr. Daniels. that everybody needs to keep good financial records. So I'm going to skip you, Dr. Daniels, because I do want to ask you the next question, which I think is very important, and a lot of people get tripped up on. The most popular tax deductions include home, office, self-employment tax, car, business loan, interest, and bad debt deductions. Are there other tax deductions that we are overlooking? Because it seems to me the rich knows where all of them are, but we seem to not be able to find any of them.
Mr. Khafi, the answer to this question is absolutely. I see business owners miss out on wealth creation every day just by failing to take advantage of opportunities in the tax code for fringe benefits. Let me give you an example. The deduction limit this year for a business owner, if they had a traditional 401k, is $58,000. And that's per owner. Next year, it's $61,000. So it increases mainly every year. And that's just traditional 401ks. We got flexible spending accounts, health savings accounts, the list goes on and on and on. And these are legal deductions. And the typical small business owner, I'm going to be the next Jeff Bezos. I don't need a retirement plan. I'm going to be able to do this forever. I'm going to be able to, I'm going to bet on myself. And I'm like, yeah, but still, why would you not want to have retirement money? So that way, I mean, you can start a business when you're in your 20s. And if you max out, I mean, by the time you're 40, you could already have $1 million in your retirement account if you make the right investment choices. So all I could do is just shake my head and try to be an advisor to people and hopefully convince them to get on board. But it's just one of those things where it is what it is.
Khafi, would you like? Go ahead, please.
And in certain circumstances, you could use that as an asset. Whereas if you need to do a business or something, you can take a portion of that and take a loan out. In some circumstances, you could take a loan out on those funds that you're saving up in your 401k.
Be very careful now.
Your insurance. You said
be careful with that, because if you're not 59 and a half, then you're looking at a 10% deduction penalty. So if you're talking about taking out, $500,000 out of your retirement plan, you got to automatically give 50,000 of it to the IRS just now, because you did an early withdrawal. Now, so like if you have, well, that's a loan, right? But if you have a major illness and you're looking at like with this COVID, with some of the people who are running around here who choose not to wear a mask to be, or get vaccinated. If you get sick, insurance companies might not, they said they weren't going to give those waivers anymore. And if you go and you're on a respirator for 5 weeks, you got a $3 or $4 million hospital bill. So in that situation, you can go into your 401k to pay that bill. You can use it to pay college tuition. There are some extenuating circumstances where you can do early withdrawals from your 401k where you don't have to pay it back. But if you are going to pay it back, you actually have to make payments to it. Otherwise, the IRS can just come along and say, oh, it's not a loan. You owe us another 10% of that money that you took out. And then, you're done from there. So hopefully I answered that question.
I'm sure the audience can hear that having a CPA or a chief financial officer or an accounting is probably, I would probably hire one of you over an attorney, because, an attorney, they come, only when you have a problem. But or maybe not just when you have a problem, but an accountant is somebody that it needs to be somebody that you have access to all the time, that you can make some very critical decisions about your life in terms of savings, in terms of investments, in terms of, when to take your money out and when not to take your money out. It's very important. That's
a great point. That's a great point. Right, because the clients that I have, I work with them 365 days a year and throughout the year, where there are some CPAs who only want to talk to their clients when it's March and April, when it's time to file your tax returns, and some clients, of those CPAs don't understand that, hey, you know what, I needed to talk to my CPA before I took that, money out of my 401k, or before I signed that mortgage note, or, were there other options for me to buy this car for my son or my daughter, as opposed to going out and just taking out a straight loan. So yeah, you're right. You're dead on, because people need to, have professionals in their corner who they're working with, that they can leverage their, what they know, as opposed to going it alone and making bad decisions.
Yes. So let me ask you, regarding businesses and masjids, or nonprofits and masjids, they both receive fundings and donations, grants from different sources for different reasons. Khafi, I know that you're very involved in securing grants for the masjids, and many of our masjids are qualified. They just don't know that they qualify for grants. And businesses, nonprofits qualify. But here is the question: how important is it to keep the monies separated from, is it important to have more than one bank account? Khafi, you go first, Khafi.
Okay, yeah. When you receive funds from grantors, you're obligated to spend it based upon what you agreed upon in your actual agreement. So you can't spend it on your light bill. You can't spend it on your rent. You have to make sure that those funds are spent properly based upon whatever you agreed with the actual funder or the grantor. Normally what I do is create a separate account specifically for grants or anything that's restricted, whereas it doesn't get mixed up with anything for my operating accounts. So I have an operating account, I have a restricted account. So right now we have a building fund program, a building expansion program that's going on at the Masjid. I have a separate account just specifically for that. It's easier for me to be able to manage and go straight to that account and say, okay, this is the balance in that account. The only time that I take something out, if it has something to do with that specific thing that I'm saving those funds for. And it's the same thing for your grants. You just really want to make sure that you don't get into a space where when you receive funding from a funder, the government, especially the government, I've seen different individuals and institutions who have misappropriated funds, and it's not intentional. It's not intentional. Our mind is, our people, we rob Peter to pay Paul. But in this instance, you can't do that. You can't use those funds to pay Paul. It has to stay with Peter.
But Khafi, let me ask you a question. Isn't that practice always been, or should have always been in our masjid? And my example is that many people give to the masjid for specific reasons. Like some will give to the seniors, some will give to a feeding program, some will give to transportation, whatever the case may be. Some will give to a building fund. Isn't that the same concept, though, as a grant?
Absolutely, absolutely. And I hope I'm not jumping ahead. I know that
Go ahead.
in the conversation we're going to talk about accounting systems and being able to manage your accounts and knowing what all your funding is going to. That's very, very important. That's a part of integrity and transparency. If I give money to the seniors, it should go to the seniors.
Right.
It shouldn't go to a bus. It should not go to the lights. It should go to the seniors. So it's very, very important to, I think the biggest thing about accounting is to make sure everything always balances out. You have a check and balance for everything. So you have to make sure that whatever comes in, it goes into the right place. And you have a check and balance to know that it went to the right place. And when it's spent, that it's spent in the right area. So it's very, very important to make sure that those things are happening on a consistent basis.
Let me ask you this, Khafi. Is it necessary to have different bank accounts?
Well, yeah, I would say yes. Only because in our masjids, we may not have people who have the right experience in those roles of responsibility. And I think I'm jumping into another one of these questions, like separation of duties. You want people in those roles that are going to at least know that things are going to this pot and it's staying in this pot. Things are going to that pot and it's staying to that pot. So what we run into is that we have well-meaning individuals that come in to help the masjid, but they might not necessarily have the proper skill set to facilitate what it is that we're trying to do. And I understand that sometimes we're at a loss because, unfortunately, sometimes we're begging our people like, hey, step up. You're an accountant, you're a bookkeeper, just give us some of your time so that our community can grow and develop to be where it needs to be. So really, that's normally what we are up against as masjids, is that we don't have people in a specific role that you needed. You have a well-meaning person, but that skill set is not present in the community. And even if you did have to deal with someone who may not have that skill set, they have to have their wherewithal, and you have to press on them to get some type of training in order to facilitate that. Accounting is so important. It's so important. It drives so many things. So it's important to make sure that you have, even if you have somebody that might not be their skill set, but they got their drive, get them trained up. They have simple softwares like QuickBooks. A lot of people use QuickBooks. They have a lot of training. So it's really an opportunity for even somebody to learn a new skill set.
Okay.
So it's just so very, very important.
I want to ask Dr. Daniels. Dr. Daniels, in a business, it's the same question, but in a different way. In a business, I have a business, and I have a nonprofit organization, and I like spending money. I pay myself.
I know where this is going.
I pay myself more than I'm worth. You know what I mean? Tell me how much trouble business owners get into because they mix the nonprofit money with their personal money. I want to hear that.
Let me step back and address your question. I think I can answer it in two ways, because I think I hear there's two questions here. You're talking about how to keep your money separated in terms of your bank accounts within the not-for-profit, and then you're talking about keeping your personal separated from the business.
Or seeing the nonprofit money as my personal. So it's kind of a mix of all of those. So
okay, if you see that not-for-profit money as your personal money, then jail is the place for you. Yes. Let me just state that plainly. There is no dollar magnitude on fraud, and fraud is it comes from the word scienter, which is Latin for intentional knowledge. If there is any intentional knowledge in how you partition, or if you merge your personal with the business part, matter of fact, even as a corporation, you can embezzle money from your own company. So, I mean, think about that, embezzling money from your own company. So now with that said, let me go back and address your question. So if you're talking about if it's a good practice to keep or maintain separate bank accounts, the answer is yes. And so I agree with Khafi on that one. So at a minimum, I strongly encourage masjids to separate their funds. I mean, I'm going to go a level higher than Khafi and talk about the separation between unrestricted donor funds and restricted donor funds. Okay. Restricted donor funds are funds donated where the donor has specified how they want that donation to be used. Right? The seniors, not the light bill, not the housing fund, okay? So to take things a step further, and Khafi's probably already on top of this, with accurate financial reporting, which is where we started this whole conversation, I would mandate that there be a separate statement of activities, or AKA an income statement for each donor restricted fund.
Are you talking in reference to nonprofits as well?
Yes. Nonprofits. Yes. This is only a nonprofit thing. Okay, then. Restricted donor funds versus unrestricted donor funds. Okay. Keep those two things separate, keep separate bank accounts, and also generate separate income statements for each donor fund. Like, for instance, if you go out and get $1 million grant It's not the same as the 30,000 that may have been donated for the seniors. That $1 million grant may need to be audited, where you wouldn't have to audit the 30,000 that was donated by the membership for the seniors or the bus or for the housing or things of that nature. But that grant, if it comes from a government source, they want to know that you're using that money the same way how you applied for it on that grant application. So that's one. Part two. So as a not-for-profit, if you're thinking about if it's good to have personal and business accounts, of course you better separate them. The term is referred to as commingling. Commingling personal and business accounts is never acceptable. If you want to go to jail, start commingling, right? And even if you own your own personal business, commingling is something you never want to do. It can cost you in terms of you losing your limited liability protection if you're a corporation, and it can diminish the accuracy of your financial records. So regardless of your business entity structure, use dedicated bank accounts and credit cards for the businesses that you own, and use dedicated bank accounts and credit cards for each business that you own exclusively. It just makes the accounting go much further and easier. So when you come to a guy like me, it's easy for me to see what belongs to which business if you own 2, 3, 4, 5 businesses. I mean, that's the best I can tell you.
Let me ask a question from the audience.
Okay.
What tax benefits do clergies receive?
Well, there's separate treatment on the way how their Social Security is collected and reported. And how much time we got? Because this is a really long answer. The person who raised this question, let me talk with them offline. I would rather do that so that way I can refer them to the specific documentation from the IRS, because there's a lot going on there.
So let me ask you this then. Is a clergy and an imam equal?
Oh, yeah.
So then whatever the answer is for a clergy, that's also the answer for an imam?
Yes, you just have to be ordained. And there's different ordination bodies, but if you're ordained, there's different, like for instance, you can get a housing allowance that may or may not be taxable. So there's different things that's going on for members of clergy. And I'd be glad to talk with them one-on-one on that one, because whoever they're working with, their CPA should already know these rules. But it's important for the Masjid to know, because the Masjid could get in trouble if the Masjid does their own payroll, or even if they're using an outside payroll company, if they don't tell the payroll company to treat that member of clergy as clergy, then they may not get it right either. So be mindful of that. Okay.
So because of that question and the idea of keeping money separate, I want to go to a question to both you and Khafi. So Dr. Daniels, I'm going to start with you. And perhaps it's the same answer. What kind of software? Well, let me say this. There's a question from the audience that what training can an inexperienced individual take to become better stewards over Masjid finances? Now, before you answer that, I want you to connect it to my next question, because many masjids, for example, are not able to hire someone as qualified as Khafi. They may have a bookkeeper, or they may, have someone who posts the donations by hand. So keep that question in mind. What training can an inexperienced individual take to become better stewards over Masjid finances? But I'm going to connect it to make recommendations on what kind of software a business or Masjid can use.
You want me to take that one, or you want Khafi to go first?
I want both of you. I want you to take it first because of your experience as a professor and teacher, teaching auditing and how to stay out of trouble. Khafi keeps us out of trouble because she's just an honest person and she's qualified. So I do want her to speak to it in terms of the Masjid for people who are not qualified and get themselves in trouble because they're not qualified. But I need you to speak to it from that legal, stay out of trouble kind of thing. Go ahead.
And hopefully I'll avoid my own biases in my response to this question. But I can tell you that being a licensed certified public accountant is an honor, and it is a profession. And it's the flagship in any business school in the country that you go to, the accounting major. It is the hardest undergraduate major that you can pursue with medicine. So I preface my response with that in mind to say, this is something that cannot be done overnight. It requires a different type of thinking in order to do double entry accounting. And as far as software goes, I haven't seen an accounting ledger prepared by hand in over 30 years that I've been doing this. But if it works for the business owner, then go for it. But I wouldn't encourage it. If you know how to perform double entry accounting, and then you might be able to do your own accounting, but this can be a headache. And there's a reason why people go off and get degrees in this stuff. My clients pay me to take this burden off their hands so that they can focus on running their businesses. But I also act as their CFO, and I add a layer of expertise to their business that they might not have that goes well beyond accounting. I provide proactive decision-making that enhance their profits, where they benefit more than what they pay me. Like, for instance, what I just told you about the 401k deductions. Think about that. Individual clients that consult with me aren't paying me $58,000, but that's what I'm saving them in their taxes. So the accounting software that's out there, trust me, I've used them. The top two, and I'm not even going to name, I heard one of them tonight, but my own personal experiences with the software is that I'm not a layman. I know what the numbers are supposed to mean and how they should look. So I had my own situation where I was using that same company to do my payroll. And then when I looked at my numbers weren't right. And I told them, I said, hey, I know what this is supposed to look like, and called their customer support. They couldn't help me. So I actually got to their developers because they understood, where I was coming from with my question, and they knew my credentials, and their developers couldn't fix it. So then I switched and went to another company just because one of my clients was big on that company. Used that one, ran into a similar problem. So it just led me to create my own software that I use for my clients, and I use it for my in-house clients. I'm working on how to put together a version that I could actually roll out and allow people to use without my expertise. But to get back to your question, if the software enables you to separate costs from expenses, and for not-for-profits, if you could further disseminate or segregate general and administrative expenses from fundraising and from programs, then the software should be okay.
So your answer is very technical, and
I apologize for that.
No, it's needed. It's necessary for the business community, but it's not. It may not be very practical for the masjids who don't have the money, the funding, and they want to. And this is Khafi's experience. Khafi comes with that because these masjids just don't. Many of them don't have staff. So Khafi, I understand perfectly of what Dr. Selby said, and that's perfect in a perfect world. But I need you to answer to those masjids that cannot afford a chief financial officer, but need to perhaps get an audit, or do need a CPA at some point in the year. How do they manage keeping good records?
I would say, I think Masjid Muhammad did this before I came here. They had a CPA come in, set up their books, and they had someone in the office trained on how to at least enter your receipts and enter your expenses. So then you do need someone that knows how the intricacies of the actual reporting. You could train someone also to do that if they have the capacity. But I do recommend for masjids to at least have somebody, it might be on a consulting basis. So to be able to come in, and it might be quarterly. Like they might come in, set up your books, train someone to do the day-to-day activities, and then time and time again have them come in to review the processes, make sure everything is still consistent. And of course, you have your CPA come in to prepare your financial statements and help you through the audit process. So you need more like a partner to be able to, if you don't have that skill set inside of your institution, partner with a consultant to be able to come in to be able to help you along the way. Ways that you can possibly afford, because a lot of our messages can't afford that. So as you go through the process of perhaps receiving grants, or you may have to save up money and have a fund specifically for that, because it's so important to be able to have that function so you can be able to grow and develop the business of the masjid.
Yeah, that makes a lot of sense, because imagine going to apply for a grant and you're talking a 6-figure grant if you don't have accurate records.
Absolutely.
Good luck. Good luck.
Absolutely.
Yeah, but that's a good, very good answer, Khafi. I agree with everything you just said.
Yeah,
Absolutely.
because Dr. Dillon, you know, most of these masjids have, you know, they're still posting by hand in ledgers. Many of them have not, which takes me to my next question. Should a business, and for you, Dr. Selby, should a business order an audit, or should they?
Oh,
I mean, and then to you, Khafi, should a masjid hire a CPA to come in and audit them? Does a CPA do the auditing, or is that an auditing company that does it?
no, the CPA, certified public accountants are the only people who can provide you with audits of financial statements. And in some states like California, where I'm licensed, you can't even call yourself an accountant legally if you're not a licensed CPA. That's how deep it goes.
Okay.
Yeah.
So tell
Now,
us, the business.
Also, you have a review that you can do, because an audit can be pricey. So they have a middle road for smaller institutions that can't like afford it. They'll take a CPA review. It's not as extensive as an audit, but a CPA does take a look at your books and make sure that certain things are in order. And then they actually certify that they actually did that, and you could utilize that when you go for your grantors and things like that.
Right, because an audit is kind of like a Cadillac of what, you know, the full level of transparency that you want to display. But then a step down from that is a financial statement review. And then if there's something specifically that you need to have, you know, someone who's independent of the entity to look at, a CPA mainly, that's referred to as an agreed upon procedure. So I do reviews and agreed upon procedures for numerous not-for-profits. And that's pretty much what falls within their budget.
So let me ask you about confidentiality. When you have an audit, you know, most people are probably afraid to have an audit. You know, for whatever reason, it doesn't have to be anything scandalous. It just may be that they have not, I mean, bookkeeping, record keeping is not the easiest thing to do if you're not a chief financial officer, CPA.
Right.
So is there confidentiality between the auditor and the masjid and the business? I mean, are they required to report to any government service?
No.
Any information?
No. The audit report is only for the audit committee and the board of directors. If the masjid doesn't have an audit committee, it's only for the board of directors. And if any information is divulged that's specific to that entity outside the entity without the written express permission of the entity, that CPA could lose his license. That's a huge violation. So yeah, everything, whatever happens in the masjid stays in the masjid.
Now, Khafi, I don't know, did you answer the question whether you would recommend a software that the masjids could use that, you know, are at the beginning stages of trying to actually get their records in order?
Yeah, I think I spoke about that a little earlier.
Okay.
Just the easiest one that you have. There are a lot of softwares out there, I must say,
Okay.
and some other new ones that are popping up. But one of, like Dr. Selby said, one of them, he didn't say, but one of the one of the most popular ones is QuickBooks, and they have different levels of QuickBooks that you could utilize from the, you know, the person that, and that's for business and for nonprofit.
Mhm.
So from the level of just a lay person, I just want to put this expense in, and I just want to put this revenue in. That's it. Simplest. All the way to that you could actually have more robust reporting and things like that within the system. I always kind of, you know, most of the organizations that I work with use QuickBooks. I did work in the educational system, and we use a higher level dynamics software. But for the Masjid, for right now, I would recommend like the QuickBooks, because it's pretty simple, easy to learn. They have a lot of training materials out there for you to be able to do what you need to do, and a lot of accountants and CPAs, they're familiar with it. So yeah.
And Fitrah, before we go further, let me go back and answer your question. So now, if it's in the context that the Masjid feels like that, like they want an audit and they hired a CPA to do it, then that's great. Now, if that CPA is auditing or performing a single audit and auditing a grant, then that grantor may be very interested in the outcome of that audit. So that's a situation where the information could go outside of the entity.
Okay, then that takes me to my next question.
Mhm.
What could cause the IRS to audit a business? And the same question to you, Khafi, but first with a business, because you know, so many businesses, especially in the African American community, they often say that the bank won't give them a loan. And well, now I'm asking two questions. I'm going to ask that one first, but I do want to then ask a question. What the audience is asking, one of the listeners is asking, at a minimum, what organizational documents and accounts should masjids have to position themselves for growth? So I want to deal with this question first, because I want to ask on top of that question. Many say that they can't get money from the bank. And I want to know, is it solely on institutional racism, which we know exists, nobody can deny that, but does it have more to do or equal to do, less to do with the fact of having proper documents in place? And now, before you answer that question, Dr. Daniel, I want Khafi to go first, because I know that during the CDC, Khafi was inundated with requests for documents. So Khafi, I want you to answer that as far as Masjid's concerned, borrowing money, and then Dr. Daniel, if you would answer that for businesses.
I think all of it is pretty consistent. I mean, with borrowing money for the Masjid, of course, you articles of corporation. You should have your bylaws. So those are the main things that they ask for. I think the big thing is a lot of, okay, I've worked with small businesses as well.
Sure.
I know, I feel you about the box of papers that we come drop off to you. Yeah. But yeah, so with a lot of our people, unfortunately, don't have good financial practices. Our financial statements are not consistent. They're not done. We have to have a professional appearance with our paperwork when we present it. We have to have you have to know the language of whatever that area is that you're talking about. So they're looking at all of these things. Now there is institutional racism for sure, and some of those things are coming out now. Whereas, well, being addressed has already been there. They're being addressed finally. But unfortunately, like even with the project, our project, we wanted businesses to be able to benefit from the Clara project. But the businesses that came forth, they didn't have their paperwork in order. Some of them, you know, they didn't have their capability statements. So it's certain things that, depending on which area you're working in, you have to have those things readily available in a professional way, ready to present to people. So you have to look up the best practices. I think I'm kind of moving into Brother Daniel's.
No,
area.
it's fine.
But it's the same thing with Masjid. You know, you have to have like, you have to have like a background. You have to have your board in place. You have to have your board meetings that are consistent and documented. You have to make sure that you have communication that are, this is us. Your website needs to be good. Like, we get scared of that IT thing, but it is important. It's very important. Your presence is very, very important, because that's how people are being looked at in order for you to be able to receive funding. You know, they look at your financial statements, they look at your balance sheets, they look at those things. But in addition to that, they're looking at you saying, can I trust you? You know, how are you looking at your business? How are you presenting yourself? So we have to make sure that we're presenting ourselves in a way that is professional, very professional, because of course we got to be above board, you know, so we have to make sure it's professional. All of our information that we're presenting is true, it's a fact, and that is very, very organized, very, very organized. And then when people see that, they'll be open, say, okay, well, you know, they got their stuff together, and maybe I could put myself out there to make it happen. But I've seen, like, even in this process of us doing the development, they still got their eye up. They still have those points of, oh, these Black folks can't do it, that kind of thing. So you still have that coming against you, but you need to make sure you put your best foot forward when you put your stuff out there.
So, Dr. Daniel, I want you to answer that question, but I want to emphasize a point that Khafi just made. The Masjid being able to provide contracts to businesses, the benefit of development in our community, that's one of the benefits of being able to provide contracts to qualified business people in our community. But if they don't qualify, if they don't have their records in order, how important is that? That's everything.
Okay, so let me step back. There's two things I want to say.
Yes.
And the first is, do you know the best time when you can get a loan? What do you think the answer to that question is?
Year end?
Say that again?
Year
yeah,
end,
when
like,
can when's the best time to apply for a loan? The answer to that question is
when you don't need it.
Absolutely, that's the answer. How do you demonstrate you don't need it? You got good records, you got money sitting in your bank account. Yes. You've done some of the heavy lifting on your own, where you're going to show that bank that you got skin in the game too. You're putting up your own money. So I just need a little bit of your money to help me grow and can make this thing work. So that's the first part. The best time to get a loan is when you don't need it. Now, the second part is, and it's something that I used to always hear my grandmother say about people blocking their own blessing, right? So if it's for you, by the grace of Allah, you're going to get it. But are you helping yourself if you go in there to apply for the loan and you don't have financial records? You haven't filed your tax returns. Your paperwork is a mess. So, you know, if you already know that you got one hand tied behind your back and they're going to be reluctant to give you the loan anyway, based on the way how you look or your beliefs or, you know, anything, any biases that they may hold against you, don't allow them to justify that by going in there and not being prepared with what you need. So this whole argument about, oh, we don't have the money to pay for a bookkeeper or to pay for somebody like on Khafi level, sounds like Khafi knows what it takes in order to get you the money, based on what I heard her say.
Yes, absolutely.
And I've audited religious institutions, and they've received multi-million-dollar loans, partially based on some of the work that I've done for them. So we know what it takes. So get your stuff together and get your financial records, get your books in order, and get your website tight. File your taxes, keep the minutes to your meetings. Have some controls, internal controls in place, have some internal control policies. Invest in doing a risk assessment, which isn't hard to do. You could sit down in 2 hours and do that with your board of directors. There's some skill sets that's required in order to make this work. Khafi knows what it takes. I know what it takes, but you got to be willing to do, you got to hire the right people to do the right job, and Sister Fitrah, you would ask the question about, how does a masjid that doesn't have the resources, get these things done? And that's a really tough question, because how do you train somebody to treat cancer? You just can't do that to people that walk, if they're walking in off the street. Now you can declare your intentions, and we know that, it takes the best of intentions to get things done at times, but at some point you got to bring in the people that know what they're doing and just see what you're trying to do as an investment. We're going to invest this money in order to get to this thing because we need the CDC, because we need to create some jobs and we need to uplift the people in our communities.
Is there a template available to help masjids and businesses create budgets?
Khafi?
I have a budget template that I use at the masjid, but you can have that template, but you still have to kind of talk through the template.
Sure.
You have to be able to have in mind what you're budgeting for. Some things are no-brainers, but other things you need to be able to talk to. What are your goals and objectives of the masjid for this period of time? So it's different for every situation. So yeah.
And I would be remiss if I didn't respond from a for-profit perspective, because you would also ask the question about IRS audits. So
sure.
IRS audits, as according to the IRS, they say they are random, but there are some things that you can do that would help you get audited if you're trying not to be. We've already talked about establishing an S corporation status. That's something that will get you audited. Another trigger is the fact that if it's your first tax filing or if it's your last tax filing, once you check those boxes on the return, they may want to look at it. And sometimes it comes down to the type of business entity that you have. Like, for instance, if you're the type, like, say, for instance, you operate a group home and you receive Medicaid or Medicare funding, if you fail a Medicaid audit, I can tell you that if they see something that the IRS would be interested in, that would trigger an IRS audit as well. I've seen that happen. So a paper trail will help you if you get audited. We've talked about the importance of keeping good financial records and maintaining your documentation. Good documentation, cancel checks, credit card receipts, but in the system that I've created, that I use, just the statements alone are adequate. The credit card statements and the bank statements are what you need in order to provide the documentation, at least. And then if you're audited, then you go down another layer, but bank statements and credit card statements are the way to go, based on the way how I do it. Yes.
Sister Fitrah, before you
Yes.
ask the next question, I just wanted to make sure, Dr. Selby talked about internal controls, and in Masjid, I kind of wanted to touch on separations of duties. You don't want the same person that's doing the accounting part to sign off on checks by themselves. You might have a smaller office. Normally we do have you might have 5 people or 3 people who are actually running the masjid. So I think I saw another question about dishonesty with accounting and things like that. You have to put these checks and balances in place to make sure that the same person that's, like I said, signing off on the check is the same person that's making deposits into the bank account, because that creates a space where someone can fraudulently write a check and do whatever it is that they want to do. So there are some internal controls that you want to have in place. That's very important. And I think that should be like another separate conversation, because sometimes that's where we run into problems inside of masjids, because we have those smaller, or we have a smaller group of people actually working, and you want to be able to, at least to what extent that you can, to create those barriers to incite someone to even think about wanting to be fraudulent.
So we have another question from the audience. It said, during COVID-19, many small businesses couldn't take advantage of the PPP loans due to missing tax returns, type of small business organization. What is your advice to them in the current environment?
You want it from me or you want Khafi?
Dr. Daniel, if you have an answer, please.
Oh, it's what we've been talking about all along. You couldn't apply for the PPP funding because you didn't have financial records. You've already admitted that you didn't file your tax returns. That's the type of stuff that you should be doing anyway, regardless of the outside funding. But you know, alhamdulillah, it would have been a benefit to you had you done those things. So,
you know, what would you say would be your advice to a masjid in terms of, and I want to just deal with the masjids, including your voice, Dr. Daniel, because the masjid, we have so many masjids that have not had an audit, are struggling with the funds that they have. So I want you to give some, what would be your 1, 2, 3, 4, 5, 6 principles or steps that you would say every masjid should be able to check the box? And Khafi, I want you to also answer that question or support Dr. Daniel's answer when he gives it. What are the boxes they should check?
well, before I just answer that, let me just once again thank you for this opportunity to share my knowledge with your audience. I own 3 brands that cater to not-for-profit and for-profit businesses. One brand is for businesses that need management expertise in addition to accounting and bookkeeping. The other business emphasizes strategies and return preparation that enable the businesses and their owners to lower their taxes. The third brand, as a CPA, I conduct audits, financial statement reviews, and financial statement compilations. And I also perform agreed upon procedures for all types of entities. I also help entities with their readiness. So if they've already engaged a CPA or if they want to engage a CPA, but they want an expert on the inside working for them to help them get ready for what's about to happen, I do that as well. So the questions that I have been asked today in this webinar, I address on a daily basis. And I hope that my advice has been helpful. And I encourage everyone to contact me if they need any type of assistance.
Can you also add if they can afford you? I mean, Dr. Daniel, can we afford you is the question. Do you have rates for nonprofit versus faith-based community?
I work with people to get them to where they need to be. Some things that they can't pay for, we just figure out, okay, well then let's take some of the wheels off of this vehicle to look at what it is that you ultimately need. Okay. And how much time is it going to be asked of me to help you get to where you need to be? Okay. And we start from there.
Alhamdulillah.
You know, I understand the importance of this to our communities, and you know, I'm Muslim too. I want to see us all flourish. So, you know, I'm here to be a benefit to my communities and do everything that I can to help any brother and sister out there that's struggling with their business, that want to get their business off the ground, that just want to pick my brain. I'm here for. You can find me on LinkedIn. All you got to do is just search for Dr. Daniel Selby and connect with me on LinkedIn. And if you want to just email me directly, Sister Fitrah has my contact information. It's cpa@dselbypllc.com. And I'm here for you. So just know that.
Thank you. So this question, please discuss why masjids should operate as businesses when they are registered nonprofits and 501c3 organizations rather than social religious groups. Either one of you, please answer that question. Both of you, actually.
A masjid is, I think, is both. Masjid is both. If we're in America, right? So you have to have some type of business of the masjid. Now, for us, the business end, we use our CDC to deal with our business.
Exactly.
But for the Masjid, we're still in the way of our role of community, being able to engage the community and do those things you need to do as a religious institution. So we have two different entities that function to do those two separate things instead of just one thing. And I think that it comes from us just not having the knowledge that you know how you want to function. Because technically there are grants out there that most grants religious institutions cannot get. Now the environment is changing because the government wants more engagement with the faith-based organizations. So we see more grants and more engagement with the faith-based organizations. But traditionally, religious institution, because of the separation of church and state, we're not actually eligible for a lot of those grants that are out there. So you have to use a CDC or some type of nonprofit to be able to access those opportunities and that funding. So it really should be two separate things anyway.
Yeah, I think that it's just a mindset. You have to have internal controls, whether or not if you're for profit or profit, or not for profit, excuse me. You have to have financial records so that way you can know where you've been and where you're going if you're for profit or not for profit. So there's just some things that just have to take place regardless of whether you're for profit or not for profit. You need to have bank accounts that's going to prevent any level of commingling. So yeah, I just think that if you think like a business and you operate and function as a business, you will be business-like. And if you're business-like, you could obtain the goals that you have as a business. And I'm speaking as if, I'm speaking to Masjids. Be business-like and people will see you in that manner. And if they see you in that manner, you can get loans. You might, people will feel more confident with their donations. That's just my honest answer. And there's also some other things to think about too. Like if you're in Virginia, they also have these neighborhood tax credit programs. So if you're feeding homeless people or hungry people, and if you're providing education to people who are needy, there's a lot of different things that you can do from a business perspective, even if you're for a masjid, that will help you ramp up on your donations so that way you can run your programs.
This is another question from the audience. Should masjids operate their schools as separate nonprofits?
Yes.
Yes.
Yes, I'll say yes. Yes, I've experienced it in a separate boards, separate everything. Just have it as a separate institution because again, you want to have access to that funding. So if you're in a school system and you have a charter school or something like that, you want to take advantage of that. You want to be able to, as a religious institution, you can't. But as a school, you have other resources that are available to you as an institution.
And let me echo what I heard the sister say, but say it in a different way. An expert knows that they don't know everything, but they know what they don't know. If you don't know accounting, get somebody who can do accounting. Khafi sounds like she knows how to do accounting.
Yeah, she does. She definitely does. And I can attest to that. Khafi had responsibility to represent the interests and protect the interests of the masjid at the table with our development deal, the Clara, and I mean, she came through with flying colors. So yes, we Masjid Muhammad is grateful to have her, and we are now extremely happy to know you, our dear brother Daniel, because anyone will tell you I will be calling on you, whether it's for me or whether it's for the community or for the masjids. Both you and Khafi are an important resource to us because we don't want to misappropriate our funds and have the believers not trust us, our leadership. So with just a few minutes left, I'd like to give you an opportunity to address the audience and share with them whatever you'd like to share with them.
My contact information.
Contact
LinkedIn,
information.
yeah, it's Dr. Daniel Selby, and my email address is cpa@dselbypllc.com. Assalamu alaikum wa rahmatullahi wa barakatuh.
Khafi.
I would like to say that it is a very important time for our community, and that it is it's imperative that we begin to take this part of it very serious. We have our pioneers and the individuals who have sustained and grown our community that are passing on, and it's necessary for us to be able to secure ourselves and secure the legacy that they have established and left for us as a responsibility. And this is a very, very important part of us being able to keep these things for our future generations, so that the work and the sacrifices that those that have come before us have made is still here for 400 years from now. They'll know that Imam Muhammad's community, we sacrificed and we built, and you can see it, you can feel it, and not just the spiritual part of it, but the actual economic establishment of it. Yeah, that's all I want to say.
Dr. Daniel, I want you, if you have words you want to share, you know, Khafi is one of the children of this community. You know, she's a generation under us, and so you can see she's very inspiring. And it is imperative that if we are going to be in this in America, we need to have financial stability. And one of the door openers to financial stability is to know how to manage our money and manage other people's money.
That's correct.
So, Dr. Daniel, I want to give you another opportunity to share with us those who are having financial problems right now. Should they hire an accountant, a CPA? Should they have an audit? What should be the first step that they should do? They're having problems right now. What should they do?
Try to figure out how to lower their taxes. That would be one place where I would tell you to start. But then also, let me address this question too from a perspective of mental health and social media, because something that I see that's very common when I interact with different business owners is that you can look at some folks, their profiles, the things that they post, and you would really think that, wow, they're really killing it. You know what I mean? What am I doing wrong? And the conclusions that I've drawn after knowing, you know, I get to look under the hood as a CPA, and never measure your own well-being or mental health or your self-efficacy based on what you see in others. Always do it by your own accord. Figure out, as a business owner, how much do you need? Look at what your personal expenses are and figure out how much disposable income you need. And then you go from there. Make enough for you. Don't worry about being super rich. Don't worry about trying to own the world. That will only put you in your grave early, right? And you'll pick up some bad habits along the way, which we don't need in our community. Only gauge your success based on what you need for you, and forget about what other people are doing, right?
Absolutely.
Don't try to say, well, wait a minute, this guy owns a yacht, he got a Rolls Royce. My own personal experience with that is, you know, my business was in its infancy stage, and a person had hired me to come along and do some things for them. And after getting inside and looking under the hood, I just said, wow, I can't believe they put on this show on social media where it's a really dire situation for them. So that taught me to just say, you know what, never look at what other people are doing and try to find energy from them within yourself. Understand what it is, what your intentions are, and what it is that you want to do, and then get to that. And you'll be able to gauge your own successes along the way and feel good about things as you grow. And just know that it's always going to be hard to start. So I'm saying this to motivate you to say, pick the short line to get in, because the short line is where there's huge rewards.
Well, I want to thank both of you for joining today. And I can't believe that the listeners will not walk away with solutions to some of their problems. So please, I'm speaking to the listening audience that this is the first of 3 programs. December the 16th, when we will have 2 new panelists, and they will discuss starting and operating a community development corporation. And many of you in the Masjid and in your personal life perform community services that qualify as a CDC. So join us to learn how to turn these services you perform into a business, and then give Dr. Selby, Dr. Daniel, and Khafi a call on how to make sure that you have a proper budget. And you can register for the next session, the next program on December 16th by visiting studyalislam.com or thenationsmosque.org. And until we meet again, I want to say again, thank you very, very much for your dedication and your scholar. And may Allah keep you safe, and let us be kind to ourselves and to others. Thank you very much, your sister and friend. Dr.
Sister
Dillon,
Fitrah, could you keep the webpage open? Because I've seen in the Q&A that people want contact information. So that'll be
Naima just put it in. Naima
okay,
just put
excellent.
it in. Naima just put it in for them. So that's taken care of. I have Sister Sharif. Sister Sharif has asked me a question, and I do have 2 minutes. I need to just ask this. She says, what is the difference between asking an auditor to audit your books and the IRS auditing you?
The IRS, when they audit you, they're looking for money to claim. When you hire a CPA to come and audit your books, you're trying to figure out how to do things better and how to be better at what it is that you're doing. And
be prepared for the auditor. And
that is correct.
Be prepared for the IRS. I do know that.
That is correct. Yeah. So IRS audit, bad. CPA audit, good. Now, if you're abusing grant funds that you received, and then you bring in that CPA, of course, they're going to do their diligence, and they're going to be independent and be honest with you as to what doesn't look good. But then the information is for you to use in-house in order to fix it. So it doesn't cost you much there, but it's more costly. It's a costlier burden when it's an IRS audit. So hopefully that answers the sister's question.
That does. And that's the last question. Again, I want to just say that this is the first program of 3 programs. And on December 16th, we have 2 new panelists that are running very successful CDCs. And if you would like to register, please visit studyalislam.com or thenationsmosque.org. Thank you.
Thank you.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu alaikum.
Salam.